All right, so let me share my screen. All right, please everybody turn off your mic and let's use the chat box just like we did yesterday. We wouldn't want distraction, so just turn on, use your chat box. Can you see my screen? Use your chat box, okay? If you can see my screen, just let me know. All right, so let's begin. Very well. Okay, so for those who just joined, you're all welcome. You're all welcome. All right, so the study of candlestick patterns with your skill coach, Tim Legend. All right, so what is a candlestick? A candlestick is a type of price charts that is used in technical analysis that displays the highs, the lows, the opens, and the closes of price. All right, of whatever you're trading, be it currencies, securities, liquidities, commodities, synthetic, whatever you're trading, as long as you look at your chart and you see candlesticks on it, that is, it means that those candlesticks have what they are interpreting, which you as a trader need to be able to decode what those candlesticks are interpreting. So I also call candlestick the language of the charts, okay? Because we all have our languages, right? And when your fellow comes to you speaking your language, you hear him and you understand him better. But when a strange language comes to your ear, you'll be like, what are they saying? What you need someone to interpret what he or she is saying to you. So if you're not able to interpret what the candlesticks on your chart is telling you, you will be confused about the chart and you wouldn't even know what's happening. So I call candlesticks the language of the charts, which we're all going to learn tonight how to interpret these languages. So are we ready to go? If you're ready to go, comment ready. And if you have your notebook with you and your pen, just like I instructed, comment, I have my book. I want to make sure that you all have something you're jotting down. Like I told you, I don't just want you to learn or and forget. I want you to learn and pen things down that you can always teach people in the nearest future. Good. So let's proceed. Now we have types of candlestick patterns. All right. Under types of candlestick patterns, we have three different kind of candlestick patterns, like subcategories. Okay, let me say categories of candlestick patterns. We have the single candlestick patterns, we have the double candlestick patterns, and of course, we have the triple candlestick patterns. Okay, we have the single, we have the double, and we have the triple. Make sure you're jotting down. All right. So as we continue to learn and study, you would begin to see those kind of candlesticks and you understand them better. But before we enter into that section, let us first understand the candlesticks that we always see on our charts. If you open your MT5, you would notice that the default candlestick color you see is green and red. All right. That is because it's identified as the red candlestick is identified as the bearish candlestick. All right. We learned yesterday the language of the language and the terminologies of Forex trading. So you should know what when I say bearish, you should know what bearish means. Means the price going down, right? So when you see a red candlestick on your chart, it signifies a bearish movement. And when you see a green candlestick on your chart, it signifies a bullish movement. So when you have studied those things well and you know and you're used to it, you can then decide to change the color of your candles to any color you desire. All right. So in a candlestick, we have the open, we have the close, and we have the body, and we have what we call the wick. These are characteristics of a candlestick. Now, for a bearish candlestick, price opens from this direction. Price opens here, all right, and closes here. How is that? It simply means price opened here and was bearish for a period of time according to your time frame, maybe 1 minute time frame, 5 minute time frame. When we get to time frames, you would understand those ones. So price was bearish, all right, and closed here. But you might likely ask, what is this long thing here? This is what we call the wick. A wick is created when price gets to a certain level and pushes back before the candlestick closed. I'll say that again. A wick is created when price gets to a certain level and closes and pushes back before that candlestick closes. Let me explain further. Price opened here, all right, and when it opened here, it was bearish, going down, right? And it went down to this extent. The candlestick had not closed yet. When it got down to this extent, the bulls pushed price back up to this level and price closed here. So because price pushed to this level and the bulls pushed it back before price closed here, that was why this wick was formed. Okay. Now I know sometimes you see some wicks sometimes that are very long. All right. You can see sometimes some wick can be very long on a candlestick. It simply means the same thing, that price opened here, the bears pushed down deeply to this extent, and the bulls rejected that price to this extent before the candlestick closed. And that is why the candlestick will be in this format. Why is this wick created on the top? It means that when price opened, okay, this is what happened. Let me give you another straight drawing for better explanation. This is the wick. Okay, and then this is what happened. When price opened, the bulls pushed up at first. Okay, when they pushed up at first, the bears rejected it immediately and pushed it back deep down. Okay, now you see, the moment they pushed it back from where it got to, this wick was created. So that's why an upper wick is being created. All right, an upper wick is created because when price opened, all right, the bulls pushed it up for a while. At that time, this wick has not yet been created because price just got open at this junction. This was where price was opened. All right, price opened here. The bulls pushed up for a little while, and suddenly the bears said never, and the bears rejected it. Now you see, the moment the bears reject it, that wick is formed. All right, so the bears rejected it deep down. So I'll have to change this color because right now it should be a bearish candle. All right, the bears rejected the candle deep down, and when they rejected it, you can see at that time there's no wick here. Why? Because the bears are still pushing down. But a wick is going to be formed there if the bulls reject if the bulls reject the movements of the bears and push back up, then this wick is going to be created here, and then price close here. All right. So this is why a wick is formed in a candlestick. So when you see a wick in a candlestick, it simply means there was rejection for a little while in that season of that candlestick when the candlestick was still active. Okay. And if you see any candlestick that's closed up and down and had no wick at all, it simply means there was no rejection at all. There was no rejection. It means that the bears were fully in power, full time. There was no rejection from the bulls, or there was no bullish presence at all. All right. But it's very rare for you to see candlesticks that open and close without a wick, because this is a fight of the bull and the bear. So the bulls must always be available to fight, even no matter what, they will always be available to fight. Okay. The same thing vice versa for the bullish candlestick. All right. You have the candle like this. So price opens from down for a bullish candlestick. Price opens from down, pushes to the upside, okay, and closes somewhere here. All right. What causes the wick to be created in a bullish candlestick? It simply means that when price opened, all right, price opened, and then the bears first of all pushed down. Okay. When the bears pushed down at first, the bulls rejected that push, and the wick is being created. Okay. So the bulls reject the push, and they kept on pushing up and pushing up and pushing up to this extent. And then the bears said never. The bears rejected for a little while, and that's why this other wick is formed before price closes here. Okay, so this is the logic of how candlesticks are formed on your charts. All right, so when you see a candlestick that forms and you suddenly see a wick, you should know, why did this wick come out? It simply means the bulls pushed down, the bulls pushed up for a while, and then the bears rejected, and that wick formed. Sometimes, okay, let's continue to forge on so that we will talk more about other kinds of candlesticks, and I will explain further what they are for. So now I've just told you we have single candlestick patterns, we have double candlestick patterns, and we have triple candlestick patterns. Okay. So now we want to also talk about direction. Your candlestick pattern also shows you reversals and continuations. Okay. So these are the main significance of candlestick patterns: for reversals, for continuations. All right. What else do I have beneath? Okay, so I would go straight to here. So like, as I said earlier, we have the bullish candlestick here. We have the bearish candlestick here. Price closes here. For a bullish candlestick, price opens down. The bears pushed down for a little while, and the bulls rejected it, and this wick was formed. And this wick is known as the low. Is the low of the candle. The bulls pushed up to this extent here, and the bears pushed down and rejected, and price closed exactly here. All right. So this is known as the body of the candle, and this is known as the wick of the candle. Take note of those terminology. The wick, when you hear candlestick wick, this is the wick, this is the body of the candle. So it's a bullish candle because it's green in color. That's why it opened from down and closed on the top. For a bearish candle, it's going to open from top and close down. Okay, the same thing. This is the body, this is the wick, this is the low, this is the high. All right. Now, there are four main types of doji candlestick. Now we are still looking at single candlestick patterns. Okay, there are four main types of what we doji candlestick. What are doji? A doji candlestick is known as a rejection or an indecision candlestick. Is a rejection or an indecision candlestick. Why is it a rejection? It's a rejection because the bulls pushed up to a certain level, the bears rejected it, rejection. The bears pushed down to a certain level, the bulls rejected it, rejection. That's why we call it rejection candlestick, all right, or indecision. For instance, we have, let's go straight to where we're going to create it clearly. When you see this candlestick on your charts, let me explain what happened and why it's called an indecision. As you can see, unlike the normal candlestick that has a good opening position, pushes deep down and closes on a good opening and closing position, and you see the body of the candlestick very clearly, the dojis have no body, as you can see. This is actually the body, but the body is very, very tiny. Why? Because the same place where price opened was the same place price closed. Why did that happen? This is why it happened. When the candle opened, let's say it opened and the bulls pushed up for a while, all right? And when they pushed up, there was a huge selling pressure, and the bears rejected it immediately and rejected it to the extent that they went deep down to this level. When they got to this level, the bull said, never, we can't allow that. The bulls rejected it again back to this level, and price closed exactly here. That was why this candlestick opened and closed on the same position. So this simply means that there was bullish presence and there was bearish presence in this candlestick, but the two presence were strong enough that there was no reasonable movement. So the same place price opened was the same place price closed. And that's why a doji was formed. And I told you the doji is indecision or rejection. All right. Let's go to another candlestick. We have what we call the Dragonfly Doji. All right. Just make sure as you're putting it on your notes, you're drawing it, okay? And give a gap, because I'm going to explain further what they are actually used for and how to actually use them on your chart. So make sure you're giving a gap on them. All right. For the Dragonfly Doji, it has a significance. The Dragonfly Doji is formed like this. Let me show you. And then you have this. Okay. Why is it called a dragonfly? Because it looks kind of like a dragonfly, actually. You know, if I draw the wing of a dragonfly here, let me get that pencil. Okay, brush. I believe a lot of you must have seen a dragonfly before. All right, something like this. It has two wings. All right, that's why it's called a dragonfly. So just let's get that off. All right, so when a dragonfly doji is formed, okay, how does it actually form? This is how it forms. The bulls, no, the candlestick opens here, okay, and the bears pushed deep down when the candlestick was open. When they pushed deep down, the bulls rejected that price. They rejected it massively, that it had to close the same place it opened. And that's why a dragonfly doji was formed. So it opened the same place and it still closed the same place, but it has more significance than this other candlestick, and which I'm going to explain further as we continue to learn. Okay, I just want to bring all of them out one after the other. Okay, So this is how it's formed, all right? The bears will push down and the bulls will reject, and this wick, long wick, will form and price close the same place. Now the next candlestick we have is the gravestone doji. How is that formed? Right now it's going to be much easier for you guys because you already have idea of how these things form. All right, this is how it looks, and it has a very tiny or nobody. All right, and how is it formed? It's formed when the candlestick opens here and the bulls pushed up first. Okay, the bulls pushed up at first and then the bears rejected that push, and price and that candlestick closed the exact place it opened. All right, that's why a gravestone doji is formed. Okay, now for the last candlestick we've got here, the long wedge doji. Okay, it's just a bit similar to the normal doji, but the only difference is that the wick is longer. Okay, the wick is longer than this other one, so there's no much thing to talk about on it. So let us begin to understand the logics of these candlesticks. All right, so we are going to start first with the first doji that we drew here, which is this. This is what we call a normal doji. Okay, it's just normal. It opened and it closed as normal as it can be. Okay, so there's no really much significant about it. The only thing it signifies is that there was rejection and is an indecision. Okay, by the time we start talking about time frames, you begin to understand how this candlesticks relate with each time frames. Okay, so for the second candlestick that we've got is the Dragonfly doji, which is this one. Now the Dragonfly doji is a bullish signal. All right, and it's very effective if you find it at the end of a downtrend. The Dragonfly doji is a bullish signal and is very effective if you find it at the end of a downtrend. Take note of that. You're learning the candlesticks and you're learning the languages, and you also want to learn how to use it to trade. Okay, if you have price, let's say you have a downtrending market, all right, and you're looking forward to buying opportunity, you want to buy. Okay, let's say it's not a downtrending market, maybe it was a pullback or so, or the price was just reversing, and you're looking for which area should I buy from. Okay, and you want to take advantage of candlesticks. If you get to see a Dragonfly doji form at the end of a downtrend like this, it is a bullish signal. Why is that? It's because price was pushing down, right? This is actually how it formed. So price was pushing down, and when price got here, the bears pushed down, and suddenly the bulls rejected it immediately. All right, the bulls rejected it immediately. So for the bulls to reject price and create an indecision around here makes that a good signal that there can be an opportunity to buy. Okay, so if you see a Dragonfly doji form at the end of a downtrend, is an effective bullish signal. Now, what we're learning right now is what we call candlestick context. All right, candlestick context, that is you knowing the real effect of the candle, because you don't just want to buy any kind of candlestick because you just saw a candlestick form here. You say, it's a bullish signal. No, you want to make sure that it forms at the right place. That's what I mean by candlestick context. You want to make sure that the candlestick formed at the right place. So that simply means that if you see a dragonfly doji form in an uptrend, is not a clear signal. You only want to see a dragonfly doji form in a down moving market before you know that this is a clear signal to buy. Okay. Now heading to the gravestone doji. The gravestone doji is a bearish signal, unlike the dragonfly. It's a bearish signal, and it's very good when you find it at the end of an uptrend. All right, at the end of an uptrend, that is price rallying to the upside, and then suddenly you saw a gravestone doji. That simply means that the bears pushed down. All right, the bears pushed down. Sorry, that simply means that after the bulls pushed up for a while, okay, the bears rejected that price and pushed it back down, and price closed here. Okay, the bears rejected it and pushed it back down, and price closed here. This simply means that the bulls pushing up and having the bears show up and reject that candlestick until it closed, giving you a gravestone doji, simply means that the bears have showed up and they came in with a good amount of strength in that period of time when that candlestick was forming. Okay, when we start studying time frames, you understand all these things better what I mean by the period of time. Okay, because each time frame have its candlestick. All right, so the bears pushed down, rejected price, and price closed exactly where that candlestick opened. That means the bears have showed up, so you should start getting ready to look for a selling opportunity. Okay, and then we have, so that's that for the dojis. Okay, I hope you took note of that. Market context or candlestick context, having to see your candlesticks at the right place. So this means that if you see a gravestone doji in a down moving market, it's not a clear signal. You need to check out for other candlesticks. You only want to see a gravestone doji in an up moving market for you to look for a selling opportunity. Okay, now for other candlesticks, we have what we call hammer. And this is how hammer looks like. Just like the normal hammer, okay? So what is the hammer? This is a pattern that plays a psychological role, okay? It plays a psychological role in the markets in the sense that it signifies two different things. It could signify a bullish signal, and it could also signify a bearish signal. Now it all depends on where you find it. If you see a hammer in a down moving market, it's signifying a bullish signal. If you see a hammer in a bullish moving market, it signifies a bearish signal. Okay. Now it's a hammer also has a lower wick, just like this you can see. Okay, and how is a hammer formed? A hammer is formed when price opens here and the bears push down first, and suddenly the bulls pushed up back to where price opened, all right, and even pushed up a little bit more before price closed here. That's why a hammer is formed. Unlike the doji that will close the exact place it's opened, the hammer would go a little bit up before it closes, and that's how a hammer is formed. Okay, so The bullish signal of this pattern is called hammer and is effective at the end of a downtrend. The bullish signal of this pattern is called hammer and is effective at the end of a downtrending movement. Okay, so if you see it at the end of a market that is sloping downward, it's a good signal to look for buying opportunities. All right, now there is also another pattern which looks exactly like it, but is called the hanging man. The hanging man also looks exactly like this candlestick, but that one is for a bearish signal. And that can be effective if you find it in an up moving market. All right. And a hanging man, just like I told you, is the same thing. It looks exactly the same way, just like a hammer. Okay. It looks exactly the same, just like the normal hammer, but the difference are their colors. Okay, the difference is their color. Now, the bearish signal for a hanging man is effective at the end of an uptrend. Okay, at the end of an uptrend. It's gonna be the same color. I mean to say, sorry, it's going to be the same color. Okay, the same color. They just look alike. So that's why I said you can find it in an uptrend or in a downtrend. Okay, so we have what we call another pattern. We have what we call inverted hammer. The inverted hammer is the opposite of the normal hammer. Okay, just that this one is upside down. Okay, sometimes their color really doesn't matter. All right, it's the pattern that it formed that is the thing you want to focus on, not the color. All right, just focus on what the pattern it formed. That's just the real thing we're looking for. So the bullish signal for this pattern is called an inverted hammer. Okay, and is effective at the end of a downtrend. And if an inverted hammer is effective if you find it at the end of a downtrend, that is to say you have price rallying down, all right, and suddenly inverted hammer shows up. Okay, that simply means the bulls have shown that they have entered the market in one way or the other. So you want to start looking for other confluences to take your trade. Okay, then the bearish signal for this same candlestick pattern is what we call the shooting star. And the shooting star is effective at the end of an uptrend. All right, this same candlestick, it looks exactly like this. Okay, is also called a shooting star. So these are the psychological things about this particular kind of candlestick pattern. They will look alike, but they can signify both bullish and bearish signals. All right, the shooting star also is still the same. It looks exactly like the inverted hammer. All right, still looks like the inverted hammer. The color is not really relevant. It's just the pattern it forms that is the real thing you want to focus on. Okay, but what makes them different is that inverted hammer is a bullish signal, which is effective at the end of a downtrend, while the shooting star is a bearish signal, which is effective at the end of an uptrend. Okay, note the difference between the two. For your hammers, the normal hammer is effective at the end of a downtrend for bullish signal, and the other hammer, which is called the hanging man, is effective at the end of an uptrend, proving bearish signal. Okay. Now we have another candlestick pattern, which looks like this. All right. Take note, is not the same as Doji. Remember, Doji opens and closes the exact place it opens, right? And this is how it looks. But the spinning top has a body, a little body. It's not a wick. It doesn't close like this. It has a little body. That's what makes it different from Doji. Okay, but it can also signify indecision. But this one is more effective. All right, so it opens here, it closes here. So there was little activity around there. All right, so the spinning top is effective at the end of a downtrend or at the end of an uptrend. You can see the spinning top both at the end of a downtrend, and you can also see the spinning top both at the end of an uptrend. You can see it anywhere, spinning top. Okay, by the time we get into our charts to begin to find all these candlestick patterns, you begin to understand it much better. Okay, so we have the double patterns. Remember, I told you guys earlier about the numbers, the candlestick numbers we have. We have the single candlesticks, we have the double candlestick and the triple, right? So all these ones that I showed you are just the single candlesticks. They are all the single, all right? So let us talk about the double candlestick patterns. So having a double candlestick pattern means more than one candlestick trying to prove a bullish or a bearish signal. All right. Now, under that, we have these patterns. Here we have what we call the hammer. All right. Here we have what we call the morning star. Here we have what we call the bullish morning star. Here we have what we call the morning doji star. All right. We have what we call the bullish dragon doji. We have what we call the bearish long legend doji. All right. There's so many of them. You don't need to stress your head cramming their names. Just understand what it formed. Okay. So if you remember the hammer that I showed you guys, this was the hammer, right? But what makes it significant is that after the hammer was formed, another bullish candlestick showed up, right? It proves a bullish move. That is a buy signal. Okay, the hammer formed. Remember what I told you guys, the difference between a hammer and a hammer and what's the other one I told you guys about? Where is that? Where is that? Where is that? Okay. Remember what I told you guys about the hammer and I'm coming. I need to set something up here. All right, welcome back, guys. Okay, I had a little interruption. Okay, guys, so remember what I told you about the hammer and the hanging man. Okay, they two look alike, but they have significant signals. All right, I told you the hammer is effective at the end of a downtrend, all right, proving a bullish signal. Okay, and I told you the hanging man is effective at the end of an uptrend, proving a bearish signal. So back to here where we came from, we have a hammer formed here at the end of a downtrend. You see, we had bearish candlesticks pushing down, and then suddenly the next candlestick that formed was a hammer here. Okay, and after the hammer formed, the next candlestick that formed after it closed was another bullish, another strong bullish candle. All right, so having these two candles as double candlestick patterns gives you a stronger bullish signal, meaning that the bulls have entered the market. So you having the idea of candlestick patterns, having the idea of just the single candlestick pattern alone, should understand that after you have seen this single candlestick form, your mindset is already telling you that the bulls have entered the market. But because you want to be sure, you want to make sure you wait for the next candlestick. And if you then see the second candlestick form and close and is a bullish candlestick, now you have the full idea of double candlestick patterns, which it has, as it has showed up, is giving you a good bullish signal to buy, as long as you saw it at the end of a downtrend. Don't forget that. Okay, the same thing, we have the morning star. All right, the bears pushed down, and suddenly at the end of the bearish trend, we saw a morning star form. Okay, you can call it a morning star, you can call it a spinning top. All right, it's the same thing as a spinning top. So when the bearish trend ended, the morning star formed. This is telling you that the bulls might likely push price up very soon. All right, here we have the bullish morning star. We have the bears push down first. The pattern forms, that's the morning star pattern form, or the spinning top forms. Okay, and then after it forms, the bullish, you see a bullish candlestick form after that morning star, and three of them together gives you a bullish morning star pattern. Means that the bears have exhausted their power, the bulls have rejected the last price they gave, and the bulls pushed up again. Means the bulls have entered the market. You can then start looking for buying signals. Okay, for the morning star doji, it's called a morning star doji because it looks exactly like this same morning star pattern. But why is doji inside of it? You have a doji in it because you have this guy here, the doji guys, the indecision guys. All right, so you already know that I told you the doji gives you a signal telling you that this person has entered the markets. All right, so if the bears were pushing down and the doji forms at the end of the bearish trend, all right, it tells you the bulls are here, the bulls were here, and their power was as the same as the bearish power. That was why it rejected and closed exactly where it opened. So it means that if the bulls can have power to close price the exact place price opened, means that they have enough liquidity or they have enough money, and they might likely begin to push up anytime. So because you want to wait for more confirmation to be sure if the bulls are really in the markets, you waited for this candlestick to close. After it closed, the next candlestick that formed was a bullish candlestick. All right, when the bullish candlestick formed and closed, it gave you confidence, letting you know that, hey, truly the bulls have entered this market. So you might start looking for opportunities. All right, the same thing goes to the bullish dragonfly. You have a downtrend, the dragonfly forms, you wait for the next candlestick and you see that is a bullish candlestick again, it gives you a bullish signal. All right, so this is you taking advantage of both the single candlestick patterns and the double candlestick patterns. All right, So this is you as a trader trying to wait for candlesticks to form and for you to know what is this candlestick interpreting to me. Okay, so since you already have idea of the single candlestick pattern, so the moment you see the first candlestick pattern that forms, your mind is already telling you what is likely going to happen next. But because you want to get more confirmation, you want to wait for the next candlestick, and the next candlestick forms and shows you a bullish candlestick like this, you're already getting proper confirmation that, hey, the bulls might likely push up. Okay, not forgetting market candlestick context that I told you about, which is that pattern must have to form at the right place. If you see this forming on a bullish move, it's not a real signal. Be careful about it. Okay, you have to see it at the end of a downtrend for you to prove that is a bullish signal. Here we have a bullish long legged doji, okay, which is what we talked about here. This one, okay, that is longer than the normal doji, and then is bullish, is a bullish signal because after it formed at the end of a downtrend, you saw the next candlestick, which is bullish. All right, now we have what we call the tweezer bottom. The tweezer bottom is formed when you have a bearish candlestick form and the next candlestick that formed was a hammer. All right, the next candlestick that formed was a hammer close to that bearish candlestick. But that bearish candlestick, note, it was a bit longer than the hammer. It was a bit longer, all right? And then the hammer formed beneath it is a tweezer bottom. Is also a proof of an uptrend in markets, meaning that the bears have exhausted all their strength here. They came here, they tried to push even deeper, and the bulls rejected it and even went a bit higher before that candlestick closed. Okay, here we have the bullish belt hold. There are a lot of candlesticks. There's so much. So all you just need to do is to focus on the important ones that you want to take as part of your style of trading. We have the three white soldiers. This is when you see three consecutive bullish candles show up at the same time. You know, after this one formed, the next one bullish, the third one bullish. It tells you there is bullish strength. You can look for buying opportunities. Okay, we have the piercing line. This is how it formed. You have a bearish movement. The bulls, in the next candlestick, you have the bullish candlestick. All right, okay, with little wicks on them, piercing line. We have the bullish engulfing, which everybody should always know. Everybody should know, be familiar with the bullish engulfing. That is when you have a bearish candlestick form, and the next candlestick that forms is a bullish one, but is longer than the bearish candlestick. That makes it the bullish engulfing. It means the bulls have engulfed the bears. Okay, vice versa for the bearish engulfing. It means there was a bullish candlestick and the next candlestick that formed was a bearish candlestick and it was longer than the bullish candlestick. That makes it a bearish engulfing. Here we have a bullish counter attack line. So many of them, so many of them. All right, so let's see what we've got here. So we have bullish engulf, bearish engulfing, which is this. I told you, you have the green candlestick form, and then suddenly the bears pushed down massively and engulfed the bullish candle. That makes it a bearish engulfing. You have the bearish tweezers. Okay, that is, you see this guy form here looking like a hammer. The next guy formed looking like a hammer. Them together look tweezer, and it's proving an uptrend. So you want to see this at the end. Sorry, you want to see this at the end of a downtrend to prove an uptrending markets. Okay, you have this bullish engulfing, you have the bullish tweezer. Okay, you have the dojis, you have the evening star, you have the hammers. So all you just need to do is to go and make research of these candlesticks and their significance. Is very, very important so that you be familiar with all these candlesticks. Okay, you want to make sure you study more about these candlesticks, how they form, where they form to prove what signal they prove. Very, very, very important. Let me see what I've got more on my list here concerning candlesticks. Okay, let me see. Bullish stick straight. Okay. All right, so that's that for candlestick patterns. All right. Now, one question that might be in your head is, do I need to cram all these candlesticks before I can actually be able to use it on my charts? Because if you decide you want to cram it all, it can be so complicated sometimes. Okay, so you don't need to stress yourself cramming all these candlesticks and knowing what's the name of this candlestick, or what's you understand. There is a simple way to actually use these candlesticks, and that is all about what we call strengths. Strength. You want to know the strength of that candlestick. When you know the strength of the candlestick, it tells you which signal it signifies. But you must have one thing at the back of your mind, which is candlestick context. That is, it has to first of all form on the right zone. Okay, so when I say candlestick strength, I mean, if you, let's say you didn't know the name of this candlestick, or you can't remember the name, okay, but you saw this candlestick form like this, you don't need someone to tell you that, hey, the bears pushed down and the bulls rejected it and even pushed up. You don't need someone to tell you that in this candlestick right now, the bulls were actually strong in it. That's just a simple way to study the candlesticks without having to cram the name. Okay, you don't need someone to tell you that this candlestick means that the bulls were strong in it. For the bears to push down and the bulls rejected back to that zone and even pushed a bit higher, means the bulls were strong in this period of time when this candlestick was formed. Then the next thing you want to ask yourself is, where did I find this candlestick? Is it at the end of an uptrend or at the end of a downtrend? It's where you found it that will now let you know what pattern it actually is, if it's actually a hammer or it's actually a hanging man. Okay, so if you remember what I told you, that your hammer is a bullish signal that is formed, that is best found at the end of a downtrend, proving bullish move. So if you find this hammer at the end of a downtrend, it means that you should look for buying opportunities as long as you saw it at the end of a downtrend. You don't need someone to tell you that the bulls were actually strong during this period. That's why I said strengths. Okay, so the bullish strength was more during the period of this candlestick. But what you want to know is, should I use it for a buy signal or a sell signal? You only want to use it for a buy signal if it was found at the end of a downtrend. This, you don't want to stress yourself cramming if it's hammer or hanging man or what. All you just want to do is, where did I see it? And if you found it at the end of an uptrending movement, all right, and then you saw it form at the end of an uptrending movement, you don't need someone to tell you that, hey, this is actually a selling signal. All right, so this is the easiest way to actually understand this candlestick without having to cram the names of them all. Okay, just ask, first thing you ask yourself is, where did I find it? Is it at the end of an uptrend or at the end of a downtrend? Okay, so after I find out where I found it, the next thing I want to ask myself is, who was in strength or who was in power during that period of time? Okay, so for instance, let's say we don't know the name of this candlestick right now. Okay, let's say we don't know the name of this candlestick. We don't know that it's called a bullish long-legged doji. Okay, but we just want to first of all find out what happened. It was a bearish move. Number one, it formed at the end of a bearish move. Okay, so let's say we don't know that the name of this thing is Doji. Okay, you don't want to stress yourself knowing the name, but what you just want to find out is what signal, who was in strength. Then when this formed, it opened the same place, moved up, moved down, closed the same place. It tells you that both the bulls and the bears were in strength. I'm giving you the ideas now. Okay, first it was a bearish move. The bears were strongly in power, pushing deep down, pushing deep down, pushing deep down, pushing deep down. Suddenly the bulls pushed back up. Suddenly price closed here. What your mind should tell you is, hey, both the bulls and the bears were in the same strength during this era of this candlestick, meaning that if the bears were pushing down for a while and suddenly the bulls showed 50-50 strength on this candlestick, it tells you that, hey, the bulls have entered. All right, the bulls have what? Entered. Remember, we're not talking about the name. You don't want to know the name right now. We just want to know what signal is proving. So number one, the area where it formed, which is your pattern, your candlestick context, it formed at the end of a downtrend. 1, 2, they were in the same strength. 3, the next candlestick that formed after it was a bullish candlestick. So you don't want to cram the name. You just don't need somebody to tell you that, hey, these two candlestick alone is proving a bullish signal. Okay, so this is the simple way to interpret the candlesticks without even knowing their names. But it's also good if you know the name so that you can always talk like a real trader. When you see something, you say, hey, that's bullish engulfing. Hey, that's bearish engulfing. Wow, that's tweezer top. All right. So try to get the names in your head. Okay, very important. So for instance, now let us look at this candlestick pattern. So we don't know the name of the candlestick, but suddenly we saw a bearish momentum moving, strong bearish momentum. And suddenly we saw this pattern. I don't know the name. I don't even want to know the name. But one thing I want to know is that it formed at the end of a downtrend in markets. Okay. After it formed, I don't need somebody to tell me that, hey, the bulls showed up here, because for the bears pushed down, it was red in color, fully red. The bears pushed down again, fully red. There was no rejection. The bears pushed down again. There was no much rejection, no much bullish presence. But suddenly, why wasn't this one long as this one's? It wasn't long. Why? Because the bulls rejected and that candlestick closed. Means that the bulls have showed up in the markets. I don't even know the name of the candlestick, but already I have the idea of what the candle is interpreting to me. Okay, so this is a very simple way to understand what your candlesticks are telling you, even without knowing their names. Okay, let me use your chat box if the things I'm explaining is actually sinking. I have my pen and book. Okay, I have well-written materials. Is hanging man and inverted hammer of the same shape? Yes, they can. Yeah, they can be the same shape. Sometimes you can see it form like this. Okay, sometimes the wick can be longer. Sometimes you can see the other one like this, and the wick not so long, but they are still the same hanging man. Okay, all right. More okay, yes, it's sinking in. Very good. So it simply means you are understanding the logic. So what I need you to do is to make sure you go and make more research of these candlesticks and how they form, so that by the time we start using it on our charts, it's going to be more easier. So let us go into the charts and look for some of these candlestick patterns. All right. Okay. All right, guys. Now take a look at what happened during this era. Price was, I'm going to be asking you guys questions, okay, so that you would give me answers to it. So be sure that you understand what I have explained. Price was bearish. And suddenly, this candlestick formed. Price was bearish. Suddenly, this candlestick formed, proving a bullish signal, which we can see clearly that after it formed, we had price rally back to the upside for a while. Okay, so what candlestick is this? What candlestick pattern is this? Use your chat box. What candlestick pattern is this? I need more answers. I need more answers. Somebody said hammer. Somebody said dragonfly. Somebody said morning star. Okay, now I'm talking about under single candlesticks, okay? Single candlesticks first. Under single candlesticks, what candlestick is this? Because you would need to understand that sometimes you will see candlestick patterns like this. And sometimes you will see it like this, with just a little body. Okay. All right, so number one thing you must understand is that this candlestick proves indecision. All right, BB just said that indecision. That's the number one thing. Remember, I told you, you must not need to stress yourself sometimes thinking about the name. Just think about what happened there. Who was in strength there? Okay, it's number one, it signifies indecision, meaning that the bears were strong in power, pushing deep down, and suddenly the bulls pushed back up and price came back down and closed almost the same place it opened. So you can actually call this a doji, but not really a doji. Okay, since it has a little body. Okay, since it has a little body, you can call it a spinning top. All right, but the name is not really very important. What is important is what it signifies, and it actually signifies a bullish move. Why? Because we see the strong rejection there. All right, we see the strong rejection. So as a trader, maybe you want to wait for more confirmation, and suddenly the next candlestick you saw was also a strong, this kind of candlesticks are called pin bar. All right, a pin bar is a candlestick that it has a large body and a very long wick. Okay, or sometimes you can just see little wick like this. Little wick is called a pin bar. Okay, is also a rejection. It proves rejection. So this was a strong rejection from the bulls, the push back up. So with these two signals that you found at the end of a downtrend, you don't need someone to tell you that, hey, the bulls have actually emerged in the market. Because if the bulls are not in the market, the bears will continue to push down. So for the bulls to show up means, for this rejection to show up here means the bulls have entered the markets. Okay, this is what we call the doji. This is a doji, a clear doji, indecision. Okay, so at this zone, it means that the bulls pushed up, the bears rejected, price closed here. All right. Why is that happening? That's why we have a lot of wicks around, because there's really push of the bulls and the bears, rejections here and there. Okay, you can see the bulls pushed up massively, the bears rejected strongly again. All right, this is because actually it's a downtrend, but suddenly the bulls showed up. So the bears are trying to prove that, hey, you cannot just come and take power off us. So that's why there was strong rejection here and there until the bears took power again and kept on pushing down. Okay, but the thing is that if you are a trader who just want to scalp a little thing out of the market and you are looking for just a little reason to buy, and you saw this form here, you don't need someone to tell you that, hey, the bulls have emerged in one way or the other. Just look for a few pips and get out of the markets. Okay, but if there's a downtrending market, as a trader, you shouldn't be looking for buying opportunities. You should just be looking for selling opportunities. Okay, so let's look for other examples. Let's look for other examples. All right, we have this one here. Okay, this is, like I told you guys, we have the hammer, we have the inverted hammer. All right, so this is an inverted hammer. Okay, this is an inverted hammer. You see it had a little body around there and closed almost the same area. You can't call it a doji, because a doji would have to close the exact place it opens. You don't want to, in a doji, there has to be nobody at all. Nobody, just like this. This is a gravestone doji. Okay, but whenever, as long as you saw a little body form, okay, you can call it a hammer, a shooting star. I don't have strength cramming all those names, okay? But just know that this candlestick is also the same thing as this candlestick, okay? It's also the same as this one, all right? As long as you see a body forming it. I told you guys the color does not matter. What matters is where you saw it, where it formed, okay? That's what matters. Now here, it was an uptrend. The bulls were pushing up, and suddenly there was a strong rejection that formed that pattern. After the pattern was formed, you see the bears started showing up and pushing down. So where we found it is what matters. We found it at the end. We found it in an uptrending move, proving a down movement. Okay, so that's what really matters. Here we have, let's say, this is let's go back to, I think, a morning star, something or so. Okay, the bullish morning star. So that should be a bearish morning star. This one should be a bearish morning star. That's this. Okay, the triple candlesticks. We have the bulls pushed up. There was indecision around here, and the bears pushed down, proving a down movement, and price moved down to this extent before the bulls pushed up back. Okay, so where you found it is what really matters. Where you found it is what really matters. Very, very important. So you have to go to your charts and try to train your eyes to be able to spot these patterns easily. Okay, when you spot them, you ask yourself, where did I find it? After it formed at this zone where I found it, what happened next? Okay, those are the things you want to always consider. Here we have bearish movements. We have the bearish movements here. And suddenly we saw this candlestick form here. All right, this candlestick formed here. And suddenly what formed next? The bears still tried to show strength, and the bears pushed deep down, and the bull said never. They pushed back up, even with full force. Already seeing this candlestick alone was already giving us a signal that, hey, the bears are losing power because the bulls have showed up. That was why this indecision happened here. All right. So the next candlesticks we saw were what? The bullish move. So it was a good signal, seeing it at the end of a downtrend. We have another here, the bullish move, rallying to the upside, and suddenly a candlestick formed here. Looking at it as a single candlestick alone, the Doji, and suddenly looking at it as maybe a triple candlestick, evening star. Okay, evening star proving a sell signal. So you just want to understand that these candlesticks have strengths, they have powers, okay? They have good effects on the charts. So reading it and interpreting what is explaining to you is very important. And understanding where it formed is very important. Very, very important. Okay, guys, very, very important. So I would love to know if there's anything any question you have that we need to talk about, or I need to explain further to your understanding. Kindly turn on your mic and talk to me. Kindly turn on your mic and talk to me. Your assignment is to train your eyes on your charts to be able to spot out all these patterns with ease. All right, talk to me, guys.
Hello, sir, Tim.
Yeah.
Please, I want to ask a question. Most of the time I look at my charts, sometimes I see these candlestick pattern we just learned today, most of them at the middle of a trend, probably an uptrend or a downtrend. As the trend is going, sometimes this candle forms in between them while the trend is still going on. So I don't really understand, how do we know what to do in that situation? If we can be able to know, say, okay, this thing wants to change trend, or it wants to go like this, or it wants to go like that. So I don't really know. I want to really get a grasp of that. Thank you.
All right. Now we must always understand that it is not all the time that you see this candlestick patterns that is going to give you that signal. Okay. We must always understand that fact. Very, very important. For instance, we had the bullish move here, and suddenly this pattern formed here. All right.
Exactly.
Good.
Exactly.
So as the pattern formed, your mindset is kind of like telling you, hey, the bears have entered. That's where you want to actually, maybe you want to wait for the double candlestick confirmation. Now we can see clearly that the second candlestick that formed was not in strength. It was also an indecision again.
Decision.
Yeah. So as long as it's still indecisive, you don't want to look for any trade yet, because indecision simply means the two guys are in strength. The bears, the bulls are in strength. There's no proper direction. It's a range. Okay. So for you to see two indecision candlesticks forming like this means stay off it. As you can see clearly, all these were indecisions. So you don't want to buy or sell anything around here. Just stay off it until you see now the bulls continue the move. All right. A pullback, the bulls continue the move. So you just want to always wait for, either you wait for a let's say, first you want to wait for an indecision candle, and the next candle that should form after it should not be indecision also, but should be a bullish one or a bearish one. For instance, the indecision here formed. The next candle that formed was a bearish candlestick not an indecision. Okay. So when you see two indecisions forming, stay off it for the meantime. Okay, because it means the market is still indecisive. But when you see it form and the next candlestick that formed was bearish or bullish, depending on the market context, which means depending on where it formed, where you saw it now it was at the end of an uptrend, All right. The next candlestick that formed after that indecision was bearish. Then you know that, okay, I think it's high time I start looking for reasons to sell. Depending on other confluence you have together with the candlestick confluence. So you must make sure that you're not just looking only out for candlestick confluence alone. You should have other confluences so that you don't fall prey to the scam of the markets. Okay. Now you see the same thing happened here when the bulls pushed up again. There was two indecision. You don't want to sell or buy anything here until you see the bulls pushed up again. This little guy formed. The bulls pushed up here again. All right. The next candlestick that formed was what? This was a hammer or an inverted hammer. I don't like stressing myself knowing the name. I just want to see what happened there. Okay.
That's an hanging man. It's an hanging man.
Okay. So an hanging man formed up here. And what happened next was a very strong bearish move. The next candlestick bearish move before indecisions began again. Okay. So it's very, very important that you always want to wait for at least maybe the first candlestick to close completely. You wait for the second candlestick to also close completely for you to be sure if truly this is a bullish move or a bearish move. Then maybe from the third candlestick, you want to start looking for your entry, depending on what other confluences you have seen have showed you also. Was that taken?
Very well. Thank you very much.
All right. Are we going to have another class regarding the candlestick, and would you give us that image of them? This is the class we have for candlesticks. That's why you have the opportunity to ask questions or whatever you don't understand for now, because tomorrow we have to forge on to pips. We want to calculate pips tomorrow. The other things, we have a lot of things though. So if you have any questions, please kindly ask, okay? Any further question?
Yes. Okay, good evening, Satin.
You're welcome, trader.
Yeah. I wanted to ask, between the wick of the candle and the reprice of the candle, which is more effective in taking market decision?
Between the wick of the candle and the real
price.
But the wick is a price. So maybe what you mean is between the wick, maybe you mean between the candle that forms the wick and the one that has body. Is it what you mean?
Yeah. Yeah.
Okay. If you see a candle that forms a wick, let's say, let me look for an example. Let's say, all right, you see a candle that forms a wick. All right. That wick it formed is just trying to give you, is just trying to quote something to you. It's telling you that, hey, someone has entered the markets. Okay.
Okay.
The bulls we are pushing up here, for instance, they pushed up to this extent and the bears pushed down and it created this long wick. Your mindset tells you that, hey, the bears showed up full time during this period of time. This is 15-minute time frame. Each candlestick is formed per 15 minutes on this candlestick. So it means that for 15 good minutes, the bears showed full strength during this era. All right. Now, you have seen this candlestick already. Your mindset is now telling that, hey, if you want to sell, you have to start looking for opportunities to sell anytime soon. Okay. Like I told you, the next candlestick you want to wait for. Now we saw it was also an indecision. You want to still stay off for the meantime because it's not properly clear. Why should I be seeing indecisions? The next candlestick that formed was not a strong one. It was almost indecision also. You want to still stay off. Now, the next candlestick that formed was a bullish candlestick. And suddenly we saw this candlestick form here again, the bears showing up. Okay. After they showed up, the next candlestick that formed was indecision. You still want to stay calm and observe. The next candlestick that formed now was another bearish strong movement, telling you that, hey, right from here, your mindset was already telling you that the bears are actually gradually showing up. Now you're still observing and observing and observing up to this extent. here you're already having even more confluence to sell anytime soon. Okay, so if you see in this candles forming with long wicks like this, it's not telling you to sell yet. It's only giving you idea of what is likely about to happen until you see the full strength of the candle pushing down. Okay, so this ones with full strength is what you want to use to execute your trade, not the ones with weak, not the ones with indecisions around them. Okay, this one is only trying to inform you that, hey, if you are looking forward to sell, I think it's getting time. Start getting ready or start checking other confluence you have. So that's where you want to first of all ask yourself about the market context. Where did I find it? So probably this should be that you found this at a resistance zone, okay, which is at the end of an uptrend. You started seeing this, telling you that, okay, according to market context, is correct that I should look for selling opportunity because I'm seeing this close to my resistance zone or even at my resistance zone. Okay, that's why I told you market context is very important. Where did that candlestick form? If it formed on a downtrend, is not a clear signal. Okay, so now after all the signals that happened, when it got to your resistance finally, it created this one with a little wick, and suddenly price started rallying down gradually, still formed indecision. The next candlestick was a strong bearish candle, telling you, guy, enter. You enter, you set your stop loss. All right, very, very important. I hope that was taken. All right.
Yeah.
Okay, somebody said, I want to have a PDF of candlestick. No problem, you're gonna get that. Any other question, traders? Any other question? Any other question? All right. If there's no other question, let us look at time frames. Time frames, okay? Because tomorrow we're gonna deal with pips. So let's look at time frame so that we can connive it together with these candlesticks that we have learned. So time frame is actually minutes or times that the candlesticks were formed or that price took action. Okay, we have the 1 minute time frame, meaning that in 1 minute this is what price did, or in 1 minute this is how price played, or in 1 minute this is how the bulls moved or how the bears moved. We have 5 minute time frame. In 5 minutes, this was what happened. This was what happened. All right. Now, each candlestick you see on any time frame is formed according to that time frame. For instance, this is 15-minute time frame. It means that this candlestick alone that you see here was formed within 15 minutes. After this candlestick closed, this little candlestick here, no matter how little it was formed within 15 minutes. This other candlestick here was formed also within 15 minutes. If you head to 1 hour time frame, it means this candlestick was formed within 1 hour. No matter how small this candlestick is, or even no matter how small this candlestick was, it means it formed within 1 hour. Now, this is why I told you guys that your candlestick is language of the market. It interprets something to you. For you to see price as tiny as this for 1 full hour simply means that there was no much strength during that era. There was no much strength during that era. So you being able to decode what your candlestick is explaining to you have already understood what is telling you that, hey, do you know that for 1 full hour during this era, there was no much strength. That was why the candlestick was as tiny as this, all right? And it was actually a bearish candlestick, as you can see the color. This is how I color mine, okay? So it was a bearish candlestick. Simply means that for that 1 hour, the bears were kind of like in the market, but not so strong in the market. And the bulls looked like they were really not even in the market at all, okay? Or the bears were in the market, but there was not enough money to push deep down. There was no liquidity. That was why it was as tiny as that. So suddenly, the next hour, the bulls showed up with a little strength than before. When they showed up, the next hour, there was a huge bullish momentum, meaning that there was huge money loaded in the markets for that 1 full hour, and they pushed massively here. So you understanding what your candlestick is interpreting to you already know what is happening. You don't need someone to tell you that, hey, the amount of money that was pumped into the markets for the 1 hour of this candlestick was pumped by the bulls. A huge amount of money was pumped by the bulls, and they pushed really high. Okay. So for your 4-hour chart, it simply means that each candlestick you see here was formed in 4 hours. So for this entire candlestick, 4 good hours, the market was bullish. Okay. When it opened, the bears pushed down for a while, and within that entire 4 hours, the bulls still showed strength in the markets. Now, remembering what I told you guys, that you don't need to cram the name, whether I know the name or I don't know the name. I don't need somebody to tell me that in this during this era, the bulls were actually strong. For the bears to push down a bit, and the bulls pushed up back and even pushed even more, I don't need someone to tell me that the bulls were the movers and shakers of this candlestick during these 4 hours. That's your normal understanding. Okay. Looking at it alone, the candlestick has already told me that actually, before the bulls pushed up, the bears actually showed up during this era. The candlestick has interpreted that to me. I already know. So I don't need someone to tell me. If someone just comes and tell me, hey, do you know the bears never showed up here? I'll say it's a lie. The bears showed up because this is the week they formed. So the bears showed up. All right. That's you decoding the candlesticks and what they are interpreting to you. Under the daily time frame, it means that each candlestick you find in the daily time frame, all right, was formed within 1 full day, 24 good hours. So it means that for the entire day, like this was 22nd of April. This candlestick was on the 22nd of April. So it means on the 22nd of April, this is Euro GBP. It means that on the 22nd of April, Euro currency was really strong. Throughout that day, the Euro's currency was really, really strong, that they pushed so high, all the way from 0.83155. They pushed really high to 0.4120. If you want to see how many pips that was worth from here to here, that was about 102 pips movement on the 22nd of April. Okay, so this is just how you understand your time frames. Okay, so each candlestick is formed according to that time frame. If you go to the weekly time frame, it simply means that this candlestick was formed within 1 week. All right. Now that reminds me, I need to introduce you guys to your trading view, because I know it might likely be a little complicated to you guys. So let us use that opportunity also to understand the trading view and how to use it. But before we dive into it, do you have any question concerning time frame? Before you ask your question, let me explain one other thing that just skipped into my mind. All right. Let us see, for instance, this candlestick. Now, this is a 4-hour candlestick, right? Now, I want to show you all the activities that happened during this 4 hours. All right. For you to be able to see everything that happened during these 4 hours, number one, okay, you looking at the 4-hour chart, you saw this candlestick. Who do you think was in power during this era? Use your chart box first. During this era of this candlestick, within the 4 hours that this candlestick formed, who was in power? You don't need to cram the name of the candlestick. Just interpret what the candlestick is telling you. Decode it. Who was in power during this? The bulls or the bears? The bears. Good. The bears were in power. All right. Good. So that is you understanding your candlestick, what it's telling you. During this era, tell me guys, who was in power? During the era of this candlestick, who was in power? Bulls. Good. So even though it had a wick, all right, you don't want to stress yourself. Is this a doji or is it a hammer or what? No, you don't stress yourself of the name. Just know who was in power. That's the most important thing. Okay, good. Now that you understand that, during this era, the bears were in power, right? Let us see if it is actually true or false. And how do we do that? Now, I will just have to do it like this. Okay, I just want to color that zone so that when we go to lower time frames, we'll be able to come in. Coming, just give me a second. Okay, good. All right, so let us go deeper. Let us head to 15-minute time frame. So within 15-minute time frame, we want to see what happened during these 4 hours. If truly the bulls were in power or if the bears were in power. Now, this is the place I highlighted. If you can remember in the 4-hour charts, that was where I highlighted. Now you can see what happened here. The bulls pushed up, the bears pushed down. The bulls trying to show full strength, but the bears said never. They pushed deep down. The bulls pushed, the bears said never, and pushed even deep down. Okay, and price closed finally here. So within these 4 hours, all right, it was a downtrending market. The bears were actually in power. And that was why it's closed as a bearish candlestick on the 4-hour charts. Okay, so that's that for that. If we try to circle here, if we try to highlight here, we just want to highlight this zone, this bearish move. Okay, let me remove this side. All right, so let us see. In the 15-minute time frame, we had the bulls showed up a little bit and then the bears pushed down. If we go to 1 hour, let's see what candlestick we're going to see. You can see a bearish candlestick. Let's go to 4 hours. We're going to see a bearish candlestick, which is this. You see? All right. So I believe you should be able to understand the logic behind the candlesticks and how they relate with time frames. All right. So let us try to get a bit used to our trading view, because the trading view is a very exciting platform where you can easily analyze your chart. It's very, very interesting, much more than your MTE5. Okay. So the trading view helps you to be able to analyze your markets, all right? All kind of instrument. They've got all kind of instrument, be it if you want to trade gold, if you want to trade currencies, if you want to trade cryptocurrency or whatever you want to create. All right, I will drop the link for you guys after the training so that you can be able to create a master account with the trading view. Okay, so when you open your trading view, when you create an account and sign in, under here you have your watch list. The watch list is the place where you want to put the instruments you want to trade, the amount of instruments that you would love to trade. When you click on this plus icon, you'll be able to add whatever you want to trade. So you just want to search, let's say you want to search for GBP. You want to search for GBP USD. All right. So you're going to see a lot of GBP USDs. All you just want to do is to select one of them. All right. Because I have GBP USD in my watch list already, that's why you have this X here. So in case you want to add, you just want to click on this plus icon. If I click on it, there will be another GBP USD on my watch list here. So if you click on the plus icon, you see GBP USD has just been added here. All right. So you want to search for, let's say, Euro. USD. You can see a lot of Euro USDs. Because I have Euro USD here, that's why I have this X icon. If I click on it, it's going to cancel the one I have here. All right. So if you want to add, let's say you just click on plus and Euro USD has been added. So that's how you search for whatever you want to add. So if it's crypto you want to trade, you're good to go. You look for whatever is under crypto, Ethereum and all of them. Just search for the name. All right. So that's for the watch list. So under the watch list, you have the list of whatever you love to trade. All right. So that's for the right hand side of this. So this is where you have your watch list. If you click on it again, it's going to close. So you have a bigger screen. If you click on it again, it will open. All right. Here you have alerts. All right. You have alert on this zone. You might, that's if you want to set an alert, maybe is a place where price will get to, and you want it to call you and tell you, hey, price has gotten to this zone, come and buy or sell or whatever you want to do. All right. Here is the place where you set any alert you set. If I click on this plus icon, let me see. Let me see. Horizontal line. No. I've forgotten where I usually set that alert from. Okay. Maybe we'll have to look for that later. Okay, here, from here, I meant to say create alert. Okay. So if you click on create alerts, alerts are not currently available in replay mode. Okay, that's because I'm on replay mode, so it's not going to work until I remove the replay mode though. Okay, so this is for your alerts. Here is for headlines. If you want to see what's happening, blah, blah, blah. Those ones might not necessarily be so relevant to you. This is just the main thing you want to see, your headline. Okay, so that's for the right-hand side. Then for the left-hand side, you have your tools, just like your MT5, where you have your trend line, your rectangle, this, that. So here you have your tools. If you click on the little arrow near close to the tool, you see other options. Here you have arrow. Like now I'm using the dots. If I click on the cross, okay, you can see the cross. If I click on arrow, you can see arrow. All right, that's my cursor. So, but I prefer using the cross or the dots. Why? Because if I'm using it like this, it shows me straight what it shows me price number according to my movements. Okay, I can actually use it from here, and I can easily highlight here. All right, so it makes sense when you're using it like this than using just the normal arrow like this. Okay, then here you have your trend line, arrow, all the necessary tools that you might likely need. Now you can actually put anyone on favorites. Anyone you put on favorites is going to be here automatically for you, so that at any time with ease you can just click on it and bring it out. Okay, click on it, bring it out with ease. So for you to put anything on favorites, you want to click on that little arrow. You're going to see a star. Okay, for instance, I have this arrow here. There's no arrow here. I don't have arrow here. If I want to put it on favorite, I'll click on the star, and you're going to see arrow is going to be added here. The moment I click on star, you see arrow has been added to my favorites. So I can easily keep it anywhere I want anytime. So anytime I just need it, I'll just click on its arrow and use it to do what I want to do. Okay, that's that. So under here, you have other tools, Fibonacci and all the rest. You just don't want to, you want to know what you want to use. Here, under here, you have brush, highlighter, rectangle. You see, I have them highlighted. That's why they are here. Okay. Then under here, here is where you have your time frames. TradingView has time frame even up to 1 second. You can imagine how beautiful that is. MT5 just has from 1 minute. All right, TradingView has 1 second, 5 seconds, 15 seconds, 1 minute, 3 minutes, 5 minutes. All right, 1 month range. You can then decide to check your range. Okay. Here is where you want to change it from candlestick to line charts. This is a line chart. Okay. If you don't want line charts, maybe you want baseline, this baseline. So when the price is bearish, it shows red, green, whatever. Okay. So, but we all are used to candlestick. This is bar. This is bar. The olden days trading style. So this is candlestick, which everybody know. Okay. Here is your indicator. You want to look for certain indicators. You just want to search for the name of any indicator that you're looking for. Okay. So let's say we're looking for moving average. You'll see a lot of moving average. Here it says moving average line, two line cross, moving average cross, moving average. So let's see what two line cross means. Remember, you have this star, means you want to put it to your favorites. So if you click on the star, it's going to be added to your favorites here. Okay, so if I click on moving average, let me see what it's going to look like on the chart. So you can see what it has given me here. So it's now left to you to know what you're using it for. Okay, if you don't want it again, you want to click on, let me see. Okay, you're going to see it here. Whatever indicator you add would be listed up here. So this is hide. If you click on it, it's going to hide it. Okay. If you click on it, it's going to bring it out. This is the setting for it. Maybe you want to set the parameters or whatever, the properties. Okay. This is a source code. You don't really need that. Then this is if you want to remove it. You click here to remove it. Once you click there, you want to click here and it goes back down. So let's say, let me look for the normal moving average that we know. Moving average. Let's see, moving average here. Okay, so we have moving average here. So maybe you want to change the settings of the moving average. Remember, you're gonna see it up here. If I click on it, it's going to leave the chart, but it's still around. If I click on it, it's gonna appear back. Settings of it. All right, here you want to set the settings, EMA or SMA. Click OK. If I want to remove it completely, I'll click here and moving average is gone. That's for indicators. All right. Let's see. Here is the XMS alert. Here is the replay bar. Now, the replay bar is really very important, okay, because it helps you be able to test run your strategies, okay, and it's very, very interesting. For instance, let's say I want to test run my strategy, and once I click on replay, this line is going to come out. So maybe I want to cut price all the way from here. Price will cut from here, and I can begin to set my strategy and then begin to test run it. For me to test run it, I'll just continue to click on play to see how price was playing according to my strategy. Okay. If you wanted to play by itself, you click on this one. It's going to be playing by itself according to. So already you must have analyzed the market, and then you want to see how did my analysis play. So this is what you use. You use the replay mode. It's very, very interesting. This is when you want to test run your strategy. Okay, it's very important. You guys would need that. But the only thing about it is that you can only get this replay mode in the premium package of the TradingView. So you just need to have to purchase the premium package to be able to use that feature. It's very important for you so that you can use it to test run your strategies, okay? What else? Okay, under here you have ruler. You can use your ruler to calculate how many pips from here to here. Let's see. If I click on ruler, I'll click on here. I'll drag it all the way up to here, and it shows me how many pips. That was 217 pips. All the way from here to here was 217 pips. If I want to see all the way from here to here was how many pips? It was about 199 pips. That's what you use your ruler for, okay? Another beautiful and interesting tool that you would need to use is the stop loss, buy position and short position, okay? So you see I have it on favorite because it's really, really important. Now, when you have done your analysis in your market and you just want, and you maybe, for instance, you're looking for a buying opportunity, then you want to go for the long position one. If you put it here, you're going to have this here. So with this, you can know how much you're targeting. Let's say, for instance, I want to target all the way from here. Okay. So I'm targeting 149 pips, as you can see here. And then I want to set a stop loss of just 20 pips. Okay. So here I have 43 pips. I just want 20 pips. So if I drag it up, down, 20 pips. Okay. So this simply means that if I want to buy this trade when price gets to my zone and I've seen all my confluence, it means that if this is going to be a 20 pip stop loss that I want to use, okay, if you use your MT5, remember you're going to use your MT5 to execute your trade. You can execute trades on Tradingview, all right? So when you place a buy on your MT5 and you want to know what number should I input as my stop loss? Now, because you have used your Tradingview to calculate 20 pips, right? By the time we start dealing with calculation of pips, you guys would be able to understand how much is a pip worth to your account, and that's going to be tomorrow. Okay, so here now you have set this here as 20 pips. You want to know which was the exact number I should input as my stop loss, so that once I click it, I know that I'm losing only what I agreed to lose. So you want to double click on it. When you double click on it, here is, he says stop loss level, take profit level. Okay, now under the stop loss level, 200 is equivalent to 20 pips. All right, under the take profit level, let's say maybe you're targeting, you want to target 50 pips. So use your chat box, let me know if 200 is equivalent to 20 pips, what is going to be equivalent to 50 pips? Use your chat box, guys. I want to be sure that my traders are still awake. If 200 is equivalent to 20 pips, what is equivalent to 50 pips? 500. Good. So if I input 500 here as take profit and click OK, that means I'm targeting 50 pips and I'm losing only 20 pips. All right. Good. So, but now maybe I want to target as high as this because maybe I have this high already here before as resistance. So I want to target as high as this. Simply means I'm targeting 150 pips and I'm risking 20 pips for it. Now see where your replay helps you and test run your strategy. Maybe you just finished the analysis and you want to see if your analysis or your strategy is working. Now you have set this here, all right? And then you start clicking on the replay mode. You see how, so it means your price is close to your stop loss. That's what it means if you're risking 20 pips. Or let's say maybe we're trying to risk, let's say, okay, let's just put it like this. You're risking 49 pips, all right? And you're using your replay mode to test run your strategy, all right? So if it's going in loss, you see it's going to be red in color. And if it starts going in profit, it's going to be blue in color. So at this junction, it means your stop loss has been hit. So this is you using the replay mode, testing your strategy, knowing how many pips you're risking, knowing how many pips you're targeting. All right, very important. So this is for the bullish entry. For the bearish entry, that is a short position. Remember, you can find it on the sidebar because when you open your TradingView newly, you're not going to have the favorite until you start adding them one after the other. Okay, so you're going to be clicking the star for whatever you want to add to your favorites. Okay, so for the short position, that means maybe you want to, this is it. Once you put it here, you see for the bullish moment, for the bullish position, the blue zone is up and the stop loss is down. But for the bearish position, your target is down and your stop loss is up. You can change the color to whatever you want. If you want to put it green, as default, it's going to be green in color. Okay, I just changed my own to blue and red. So let me delete this one, and maybe I want to put it here. Okay, maybe I'm just test running a strategy of mine. So I want to risk 60 pips. So I will double click. So if I want to risk 60 pips, what should I put here? What digits do I put here? Talk to me. If I want to risk 60 pips, what digits should I put here as stop loss? Let me know. I want to risk just 60 pips. What digit should I put here? Use your chat box quickly, guys, quickly. You've used 2 hours for this training. Talk to me, guys. Talk to me, guys. Talk to me, guys. Are you sleeping? Wake up, traders. 600. Good. So 600. So if I want to target 1,000 pips, come on, that's much. Damn it. Okay, if I want to target 80 pips, what should I put as here for 80 pips? What should I put? I just want to make sure you understand it so that when you start using it, it's going to be easy for you. 800. If I click OK, so I'm targeting 80 pips. I'm risking 60 pips. So maybe I want to use my replay to test run my strategy, and I see price actually going my way, maybe according to whatever strategy that I'm test running. Okay, you just be dragging it to see price going, almost trying to hit my stop loss. All right, so you see how beautiful TradingView is. So stop loss hits, 60 pips lost. Oh God, money lost. All right, so that's just that for that. All right, so this is where you get all those tools that you need. Here you have stickers. Okay, you have stickers of whatever sticker you want to put anywhere. Here you have stickers. Remember, the ruler is for calculating your pips. Here is a zoom. Maybe you want to zoom this candlestick right now. If I click on it, let me see what that zoom really works for. Zoom in. Come on. Well, I don't know. Maybe later you guys can check that out. Okay. So that's that for that. Okay. One other thing here is lock all drawings. So maybe, for instance, you've analyzed your market, you put trend line and all the things, the rectangle, and you want to lock everything so that nothing can move. Because you see, if I move this thing like this, I can easily move this. I can easily mistakenly change this line from here to here. So you don't want anything to move at all. You click here, lock all drawing. So nothing can move again. Everything remains stagnant as it was. So please turn off your mic, okay? So that you wouldn't distract us. So if you want to unlock it, you unlock it. All right. This is hide all drawings. If you click on it, all the things I've drawn here will disappear. So you have a clean chart. Okay. And if you want to bring it back, you just click here and everything will come back like it is. All right. Why this is for delete. You can, if you click on this little arrow, it's going to ask you want to delete the drawings, or maybe you had a lot of indicators. You want to delete only indicators, or you want to delete both drawing and the indicators. All right. So if you want to delete everything, just click here and everything will be deleted automatically. All right. That's another thing about that. Let me see. Please, if you have any question regarding TradingView, kindly ask now so that we wouldn't have issues with TradingView when we start working with our charts. All right. For here is take snapshots. You want to snap what you have analyzed. So let's say maybe I've analyzed some things around here and everything. And I want to take a snapshot. This one, okay. And I want to take a snapshot. It's gonna tell me, do you want to save the chart image, or you want to copy the chart image, or you want to copy the link of this chart image? So if I click on copy the link, it's gonna give me a link. All right, I've copied it. It means that if I post this link for you guys right now in the chat group, if you click on the link, you will see this my exact chart. That's for that. So whenever you analyze your market and you want to share your idea with your fellow in the group, all right, what you want to do is to get the link of your chart image. All right, once you click on it, you'll be able to post it in the group, and anyone that clicks on it will come, it will take them straight to your chart to see what you have analyzed and what you're looking at. Okay, by the time we start group analysis, you guys are going to be using that. So for your settings, maybe you want to change your background and you want to change your candles, everything. You either double click, sorry, you either right click, go to setting here, or you want to click on setting here. All right, anywhere. So let's click here. So for your appearance, you want to have a white background. Me, I have white background. If I change it to black, it's going to be a black background. Okay. And then I just love white background, so I'll leave it like that. So for your candles is under symbol. Okay, symbol. Here is watermark. If you click on watermark, you're gonna have this. So the pair you're analyzing would be here with the time frame 4 hours. It's gonna write that on your chart for you clearly. If you want it to be clearer, you click here and you click opacity to make it clear. All right, or you just want it to be like this, or you don't want it at all, just click on this icon and it's going to remove. Under symbol is where you have your candlestick. You see I changed all mine to blue, and for the bearish body, right? So that's just that for that. So before we come into the training tomorrow, I want to see that you all now have your Tradingview. Tradingview is absolutely free. It's just when you want other premium things that you can then decide to go for premium, okay? But normally it's free for you to use and analyze your charts, okay? So you have to go create a Tradingview account, all right? I will drop the link for you guys after the training. You create a Tradingview account and do one or two, anything on the chart. Just do anything on the chart and get the link of your chart. Post it in the chat group. I want to see it. I want to be sure that you all know how to set up your trading views and you know how to get the link of your charts, so that when we start doing group analysis and sharing ideas, it's not going to be an issue. Okay. Someone said I have mine in phone, but it's kind of complicated though. Yeah, so you can also download the Tradingview, all right, on your phone. It's very important. Download it on your phone, because when you're not on your PC, you need to make sure that you have Tradingview on your phone. So the account you create, you always make sure you log it in both on your phone and on your PC. Why is that? Because if you log in on your PC and also log in on your phone, any analysis you make with your PC will reflect on your phone automatically. Like this drawing I drew here right now, if I open Tradingview on my phone, I'm going to see this exact drawing. That's the awesomeness of Tradingview. Unlike MT5, that's if you analyze on your PC, your MT5 on your phone is there looking at you. You understand? So that's one interesting thing about Tradingview. All right, so download Tradingview on your phone also. All right, also make sure you download MT5. All right, download MT5, which I know a lot of you should have. MT5. Another app that might be in that is also cool for you to have is there's an app called Price Alerts. Okay, maybe I would drop the photo on the chat group. You guys just make sure you remind me. Price Alerts is an app that helps you when you have done your analysis and maybe you're waiting for a certain area where you want price to get to, and you want to be alerted that, hey, price has gotten here, come and look for your entry positions. Okay, so once you set that alert with your phone on that app, when price rallies up all the way from here and gets to that zone, your phone is going to beep and alert you to tell you that price has gotten here. It's very important. You need it, because not all the time you're going to be on your screen looking at the chart waiting for candles to move and get to your zone. Okay, so you can analyze your charts, get your mind off it, because you have set price alert. Whenever price gets there, you will be alerted. Then you can then jump into your chart. Okay, so you're going to download the price alert app, and which other app you're going to need. Okay, I will send the photo. I have the photo of all the apps I use for my trading. I will send it to you guys in the chat group. Just make sure you remind me. So any further question, guys? No, you can't do price alert on boom and crash. It is not possible. Okay, it's just for currencies. All right, any further question, guys? Any further question? I believe I have tried tonight. Concerning your candlesticks, concerning the trading view, any further question? Okay, so in the absence of none, it simply means that everything that was taught tonight, all my traders understood it clearly, and then we have to forge on. Tomorrow we'll deal with pips and how to calculate your pips in order for you to know how much you're risking, or how much you're losing, or how much you're targeting. All right, so tomorrow is going to be a mathematics day, so make sure you have calculators with you tomorrow. You have your book and your pen to write down the formulas for calculating it, and a lot of things that we're also going to learn tomorrow. Okay, so in the absence of no question, I believe we are good to go for today. Turn on your mics and let me know, how do you feel about tonight's training?
Tonight's training is awesome. Like, I really enjoyed the explanation and everything. You know, because this is exactly what I've been waiting for. A good explanation like this. Though I've been, studying these things myself, but getting somebody to explain to me like this, I haven't gotten anybody like that. So that's one of the main reasons why I actually paid for this mentorship class. And I really appreciate you for that. You made it very easy for us. The price is even very, very cheap, because it's very difficult for you to see a Forex academy that is as cheap as this. To be sincere with you, I really like your kind gesture, and I want you to keep it up, and God bless you. Thank you very much.
Yeah, you're welcome, trader. You're welcome. All right, so any other things, guys, before we log out for tonight? And tomorrow is another day.
And Satin, please, I want to ask, I don't know. The first time I came to your group, I saw an analysis you gave on, I think it was on Boom 300. So I actually entered that trade that day on Boom 300. I was actually milking the market with you, not until I left the market and the price reversed. Though it didn't even reverse to my entry point, but then I was scared. I thought it was going to eat my stop loss, so I had to quit the market. And after a while, the market started going back. I think it was on Crash 300. Yeah, Crash 300. I think market started going back to where it's supposed to go to. So I was like, oh, Jesus Christ, what kind of thing did I do? On that day, you now dropped another one again. I think that one was on Boom 300 or so. I think you like the 300, Boom and the Crash 300. You really love those pairs very much. So ever since then, I've not seen your analysis on those pair, Boom and Crash indices. So I don't know. Is it that you don't drop them anymore, or it's just because of the academic class? That is why you are. I don't know. Let's just know if we can be seeing some analysis from you from time to time.
Yeah, I've actually been occupied with a few things. And on the other hand, I just needed to pause all those signals things in order to be able
Okay.
to train up my students. All right. But
Okay.
you would be getting those analysis soon from me, at least
Okay.
when we have gotten into analysis, so that at that time I know that all my students understand the analysis I drop, and it's going to be easy for everyone to interpret it once I drop an analysis.
Okay. Okay. And that is one of the major thing I really want to, know very well, like these technical analysis. I really want to know it very, very well, drawing all those support and resistance zone and all of that, the triangles and the rest of them you get. I
Mhm.
really want to understand those concepts very well. Yeah, I'll wait those opportunities anyway.
Very
Thank you
well.
very much.
Very well.
Yeah.
All right, guys. So we call this a day, and we thank God for the grace. So tomorrow is another day. In
Yeah.
the meantime, guys, stay safe and keep winning.
Thank you and good night.
Thank you very much and have a good night, bro.
Good night, traders. Good night.